Mohamed El-Erian. Mohamed, it's great to see you this morning. Thank you for being here. Your reaction to this takeout of tech that we're seeing this morning?
Good morning, Maria. I'm not really surprised. We've come such a long way. 5 straight months of gain, record levels, the NASDAQ outperforming the S&P by 20 percentage points. It's still up 26% despite last week's sell-off. So it doesn't surprise me. I think most people had gotten cautious about valuations. The big question is what next? Is this just a healthy pullback? Or is this the beginning of a convergence between very high market valuations and very languishing fundamentals?
What do you think? How do you want to allocate capital with this kind of a sizable sell-off within tech?
So I think you're going to get value and bargains, but not yet. I think that we have been in this relative mindset, ignoring absolutes. What do I mean by that? Relative to everything else, the NASDAQ and stocks have looked cheap, but everything else has been distorted by the action of central banks. In absolute terms, these are expensive valuations. So I would wait for more attractive valuations, especially now that we know that the options market has had such a huge influence on the cash market.
So it sounds like you think we're in for some selling here if you want to get in at better prices.
That's correct. I'm a little bit worried that certain people are overextended here, and I would rather wait for better entry levels.
Dagan, jump in.
Mohamed, how much does it do these kind of new day traders or these individual traders that have come in through services like Robinhood, how much has that played into the overvaluation in tech? Because I mean, this is purely anecdotal, but I've seen people who used to literally bet regularly on sporting events, and when sports shut down during the coronavirus pandemic, they really moved to speculating in the stock market. And I just wonder how much that has contributed to the kind of wild valuations we've seen on, say, a Tesla or even an Apple.
It has, and people have been playing off each other on that. And Tesla is a perfect example of that. Look, long term, it is good that we're getting more people involved in the stock market. It is good that more people have skin in the game when it comes to capitalism, when it comes to market-based systems. So long term, it is good. Short term, I'm worried that a lot of these people have come in at a particularly strange period where you had different things come together and keep on pushing this market higher and higher and higher. And it seems so easy to make money. Mm-hmm. We've all seen this before, you know, in our career. So I'm a little bit worried that there'll be a washout of certain of these investors. But on the whole, it is a good thing that we are reducing barriers to entry for the millennials in particular.
So it looks like it's really technology dragging markets down. The Nasdaq's down 350 points right now, Mohamed. You got the Dow Industrials down better than 160. But another reason to sell this morning is the lack of stimulus, right? We've got a showdown going on in Washington. The Senate is back at work. They're expected to take up a new bill this week as both sides remain deadlocked over key issues, including unemployment benefits. Goldman Sachs released a note this morning anticipating a bill before the end of September, though the price tag may be lower than the $2 trillion that Nancy Pelosi wants. We just heard from Nancy Lazar, Cornerstone Macro doesn't think we're going to get a stimulus package before the election. What do you think?
So no one knows for sure. My gut feeling is we will, and my gut feeling is it will be smaller than what the Democrats are asking for. And the key issue is to make sure it focuses on multiple areas. You know, the problem is the latest data has been confusing. So let's look at Friday's jobs report. Undoubtedly, it was better than expected across the board, whether it is the unemployment rate, whether it's labor participation, whether it is employment to population ratios, plus we've created 1.4 million jobs. That was better than market expectations yet again. However, the rate of improvement is slowing, and the hole we're in because of COVID-19 is big. So if you're on the Republican side, you say, look, the economy is really dynamic and beats expectation. If you're on the Democratic side, you say, oh no, the rate of improvement is slowing. So the data isn't helping to sort out these different views. So it's going to drag on for a while. But my own expectation, Maria, is that we do get some sort of compromise.
Brian Bremberg.
Yeah, Mohammed, on that last point you made, I think that's so interesting. I looked at Friday's job numbers and I said, wow, another 1.4 million jobs. I hear the story in the headlines, oh, the recovery's slowing, the job numbers are slowing. Well, that's what's going to happen 4 months after this thing started. You're not going to get 4 million jobs every month, but 1.4 million is great, continues to beat expectations. Why this slowing narrative? That seems more politically driven than data driven to me, Mohammed.
So, the hit was so hard. So, yes, it's great. We created 1.4 million jobs. We created 1.7. The month before, we've created 3 million on average, the 3 months before that. So these are big numbers, and I agree. But also, there's 29 million people still drawing unemployment benefits. Some of them may not want to go back to work, but a lot of them do. And that speaks to two issues. One is we haven't fully reopened. Even in California, where I am, we haven't fully lifted the lockdown. But secondly, we are finding that people are less willing to engage in the economy. So there's an issue of willingness as much as ability, and for understandable reasons. Until we deal with what I call human counterparty risk, people have to trust others that they are healthy. Otherwise, they won't engage fully. Until we deal with this, the recovery is not going to be as fast as it could be and as it needs to be.
All right, we will see. We are expecting growth second half, but we're waiting on those numbers. Mohammed, it's good to see you this morning. Thank you, sir.